Welcome back to America's Retirement Headquarters, the home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker and Dave Ross. 419-794-3030 is the phone number. If you have questions about things we talk about on this week's show or just questions about your retirement in general, that's the phone number, 419-794-3030, online, arhq.com. A big question that the nation has going into the tail end of this year, who's going to be president? The Federal Reserve is trying to balance inflation, the stock market, and public opinion when deciding when and how to move interest rates and, the whole election. Here's Chris Zaccarelli of the Independent Investor Alliance recently on Fox Business.
Our best guess is that if they do cut rates one time this year and not zero, they may do it in December and just wait till after the election. The last thing they want to do is threaten the appearance of their independence, despite the fact that they maintain they don't think about the election at all, which as human beings, I think is hard to believe because clearly everyone is thinking about it.
It is on the forefront of a lot of people's minds. I mean, we're talking about right here. Dave, Nolan, how are you guys advising clients heading into this election year?
Well, if you follow historical perspectives, election years are a great year to be in the investment markets. In fact, I've read where regardless of whether a Republican or a Democrat is elected into the presidency, that average returns during an election year are 11%. Now, in my experience this year, a lot of my people are throwing caution into the wind because they think that this election coming up is going to be unlike any of the other elections that they've experienced in their life. And they could very well be right, but do you get out of the market because it's an election year? That's probably not a wise perspective. Do you go to low risk, low return options because you're not sure of how this market's going to behave? You can get 5% with low to moderate risk. A lot depends on where you stand in terms of having the money that you need for retirement, or if you're in retirement, how your spending is matching up with the growth of your money. So if it's my money, I'm going to keep some in play because I think that this year could be just like every other election year and be good for the markets. I think the Fed waiting to cut rates, that kind of makes sense to me because they don't want to influence votes one way or the other because of their decision-making process. But that's why having a diversified, well-balanced portfolio covering multiple asset classes is very, very important. So the election itself shouldn't have a great impact, but it will have an impact, either positive or negative, or maybe flat. So that's my take on it.
Yeah, we covered this in our economic summit. That was the event that we had a couple of months ago where we talked about how to get prepared for the election year. And as Dave pointed out, oftentimes in an election year, the market has pretty strong positive results. Here it is, the end of May, and the market has had pretty strong positive results this year. What I would tell people is I heard, people that mentioned to you that, this time, being it's going to be different. Whenever I hear somebody say it's going to be different this time, that really makes me very nervous. I have heard a couple of people that say, hey, I just want to get out of the market and wait on the sidelines until things get better. I heard people when Biden got elected that they were going to get out of the market. That first year of the Biden presidency, the market was quite a bit higher. If we look at things, in the longer term over the last couple of years, the market is significantly higher than where it is. So instead of focusing on how to invest in the election year, just realize that that's one more reason to not be invested. The basics of investing, in my opinion, are pretty simple. You buy low and you sell high. The market is at record highs right now. Instead of worrying about getting in and out of the market, what you want to do at this point in time is just to implement a downside risk management system, especially if you're close to or in retirement time. Now, what that could mean in your situation is that could mean taking some of the gains that you have out of the market, moving it over to something that is non-market risk. We can utilize strategies that provide circuit breakers within the market. So ask yourself, if the market does go down and your gut feeling is right and the market does really go down, what will your current investment team do to help protect you from significant losses? And if, the answer is write it out or nothing, then I think that's really why you want to talk to us about our methodology and, what we call the independent income system, because with that approach, we can help give you better crystal clarity in telling you how to invest in your portfolio. So we, at America's Retirement Headquarters, we focus on that, and that's why it's important to have downside risk management if you're close to or in retirement time. But the other couple of tips that I would tell you is, number one is if you're younger, if it's 10 plus years, don't even worry about the election. Turn off the news, turn on the Travel Channel, focus on the long term. Over the long term, staying invested has proven time and time again to be one of the best approaches for a long-term, investor. If you are worried a little bit about election years, we could selectively help you kind of pick things out. You could consider how to position your portfolio. As an example, defensive stocks, things like consumer staples or dividend-paying stocks might be a little bit more attractive. A lot of times coming out of the election, you think about value versus growth. Value tends to outperform post-election. Pay attention a little bit to how each proposed candidate, might impact different sectors or what industries to be in if you really kind of wanted to get involved in that. But try to avoid that market timing with your gut, thinking, again, this time it's different and I'm just going to get out. But while the market is at an all-time high, again, prepare for market volatility. If it's not the election, it could be something that's a crisis overseas. It could be something else that's happened. Just know that while the market's at an all-time high, is a good time to be running the fire safety drill with your portfolio. If you have not run the fire safety drill with your portfolio, I realize the weather's getting nice outside, but at least invest an hour to get together with us, get our retirement team action plan. We'll show you how to kind of have a downside risk management program put in place in your portfolio so you can get back outside, not have to worry about short-term, the news on what happens with the elections or the markets.
That's really what it's all about, because you're going to see multiple elections over the course of your retirement, and occasionally your candidate is going to win, the other candidate is going to win, but that your portfolio, your overall retirement plan should not be affected by that. There is actually a little nugget of truth to the phrase, this time it'll be different. It is 4 years further along than the last election, so we're all a little older, hopefully a little wiser and closer to retirement. You might now need to be in the retirement, or you might now be in the retirement red zone, and so you need to be more proactive about it and to have maybe your risk readjusted. This is a great time to take a look, have that second opinion run, take a look at the independent income system by going online. You can just search for it in Google. You can also go to the website, find out more about the independent income system, and schedule a time to speak with the team at America's Retirement Headquarters. And that is at arhq.com.